loans will get more expensive for Filipinos with the Bangko Sentral ng Pilipinas raising interest rates by 3/4 of a percentage point. This brings the key interest rate to 5% effective Friday. Banks and lending companies use central bank rates as basis for loan, credit card, and deposit rates. The BSP matched the U.S. Federal Reserve's hikes to help boost the peso against the dollar and slow the increase in prices of basic goods. Joining us now for his insights is BDO Capital President Ed Francisco. Ed, thank you so much for joining us. Ano ba magiging impact nitong 3/4 of a percent rate hike ng Bangko Sentral ng Pilipinas? Ngayon na tumaas na, bababa na ba ang mga presyo ng mga bilihin para sa ating mga kababayan?
Totally agree. It's really meant to, I guess, suppress demand. But you're right, no? Kasi mataas na cost ng bilihin. Gasoline pa, because of the recent OPEC and Saudi Arabia, baka hindi bababa, which is what we were hoping for. So that will push potential price increases talaga. Some of our corporates have not even been passing on the full increases because they wanted to spare the consumers. But I think they will have to because borrowing costs are going to go much higher, diba, for their borrowing, for their capital, for the Christmas inventory. So Rico, it's a little worrisome, but it's intentional. And hopefully we'll just all have to tighten our belts.
It is indeed worrisome, Ed, because the central bank has already raised interest rates by 2.25% already this year. And it hasn't tamed inflation. So meron pa silang isang meeting this coming December. Could they be aggressive yet again para ibaba ang presyo ng mga bilihin? Because inflation in the previous month, Ed, was already at 7.7%, which is close to a 14-year high.
Yes, grabe, no? Oo nga eh. So 7.7, so even if our GDP growth was very fast, diba? I guess that's the saving factor for us. Pero yun nga, tataas pa lalo bilihin. And then in December, the government naman has not said that they will necessarily match everything going forward. They want to preserve this 1% difference, but most likely there'll be a 50 basis points increase by the US. So we might do something close to that or even at that. So meron pa. And then the BDO view, which our investment committee thinks baka until March, meron pang price increases. So everybody be prepared na lang. And then hopefully things will get better. And then next year, things will start to slow down and rates will start to taper off. Pero next year pa.
Wow, March 2023, Ed. Ilang pang buwan yan, no?
Yes.
I mean, we're now in November. So December, January, February, March. Another 4 months of rising prices. And potentially, kung mag-increase na naman ng Fed ng 0.5%, that will be 5.5%. So, kamusta naman ang ating mga kumpanya? Will they eventually transfer the higher cost of doing business to us, you and I, the consumers?
Yes. Totally agree, di ba? Kasi I guess even fuel costs are a big component of the cost of many things. And then, of course, food costs. So it has a double impact on everything. Hopefully na lang the peso will not depreciate further because tinataas na natin interest rates. But you're right, increased interest rates will make it more expensive for everybody. Even electricity rates are expected to go up with what's happening with the ERC, with San Miguel and Meralco. So ano lang, mga kababayan, just be ready na lang for it. But it's really needed.
All right, sit tight, fasten your seat belts, mga kababayans, because expect higher prices of basic goods and services. What about the impact on the economy? 7.6%. That was quite phenomenal despite rising prices and higher interest rates. What are you expecting for this quarter? And is the economy basically moving forward because of just revenge spending, Ed?
Yeah. No, before these increases, we were expecting improved economy, di ba? 7.3, 7.7, surpassing numbers. Even ADB increased our growth numbers. We would have been the highest, or maybe together with Vietnam, the fastest growing. Admittedly, all the countries naman are affected. So I think our fourth quarter numbers will slow down because of this. And potentially, come to think of it, it might not slow down because it's really going up because of Christmas.
Yeah.
So it would still remain flat, diba? Kasi of the cost increases.
So the slowdown, Ed,
first
could be
quarter
felt
next year, maybe may slow down.
Yun na nga yung sinasabi ko. The impact will be in the first quarter of 2023 from January to March, di ba? Kasi gagastos pa ang ating mga kababayan in the next 1 month and a half because of Christmas shopping. What about the impact on the peso dollar? Will the local currency strengthen even further because of higher interest rates?
Yes, at least what's happening is the last few days nga, di ba? At least we're already now below 58, no? So that we are projecting it to at least continue in that band, and as you know, di ba, our government officials said that they will defend the peso. So even if it depreciates to around 58, 59, di ba, they were adamant in saying that they will not let it reach senior citizen na 60, na kagaya ko. So below 59, kami ang view namin, 59 is the max siguro end of the year.
Pero marami rin nagsasabi ng mga kumpanya that I have spoken with over the past few weeks when it was at 59, they were already doing business at 60 and 60-50. Senior citizen na daw ang trading of the US dollar over the counter. So where do you see, where does BDO Capital see the peso by year's end, Ed?
Yeah, year end, kasi nga, if you look at it, if we match rates again, then in theory, dapat the peso should even stay where it is or even strengthen. So we're just giving a little allowance because baka naman hopefully the BSP will not match the 50 basis points in December. So even if the peso depreciates a little bit, I think even 59 is already the max. So we're hopeful that we're already hopeful na that's the case because of the incoming remittances that we really see.
What about inflation by year's end? Where do you see it? December?
Inflation, again, predominantly because of oil, that's the biggest part of the basket, diba? And then the food imports. It will slow down, but I think if it goes down siguro to 7 or 6, we should be happy. It will not go down significantly pa eh. The oil kasi is really a key, diba? And coal and oil prices have stabilized, but they're not going down significantly, and that will affect us all. But hopefully it will slow down. So we really have to see talaga the other sectors slowing down for inflation to go down.
Ed, thank you so much for your outlook with rising interest rates. Peso by year end, 59 to the dollar. Inflation between 7 to 7.5%, and potentially another rate rise in the BSP's meeting next month of about 0.5%. Thank you so much, Ed Francisco, President of BDO Capital.